Ollie Beckett, Fund Manager of TR European Growth Trust. Now, if we can start with what the Trust does, so what its objectives are, in other words.
Clearly, in its simplest form, the idea is to try and make our investors some money, doing that by increasing the NAV, and then also trying to, if it's trading at a discount to that NAV, try and increase the share price and reduce that discount by getting out of marketing, basically.
So where are its investments focused?
It is a pure pan-European smaller companies investment trust. So we are investing in companies below 3 billion sterling in market capitalization, and predominantly in Western Europe. Now, maybe going forward, we could invest in Poland or the Czech Republic, but not at the moment, are we? And essentially, it's mature markets.
Do you have a particular number of stocks that you like to keep with?
We've got quite a long list because it is a smaller companies trust. Look, more than 80% of this trust is invested in companies below 1 billion sterling. It's a fairly unique investment trust in that case. And that requires, there's limited liquidity, we require flexibility. So we have more than 110 holdings in the trust.
Now, you said you generally invest in companies below 3 billion. Do you ever invest in companies above that?
No, I think you can see us, as I say, today, we might do. I mean, we don't have to sell a company if it goes above 3 billion. And today, as I say, we've got 80% below 1 billion. Now, we could go more into that 2-3 billion range, but today we think the value is at the low end of the market capitalization.
Does the trust have a benchmark to which it's measured against?
Yeah, we're measured against the Euromoney Smaller Companies Index ex-UK. So it is continental Europe.
Are you very constrained by that benchmark?
No, I don't worry about the benchmark too much. It's another target to beat, but no, I don't look at the constituents of the benchmark.
What is your approach to dividends within the portfolio?
Clearly, it's one criteria we look at when we're making an investment decision. And today, the underlying portfolio yields a fair amount, but that's a sort of moment in time, and it's a recognition of the value there is in the market and the strength of the balance sheets. So it's not an income fund per se, and then the trust itself is paying a dividend of just over 2%.
Okay, let's look at the way you invest. Is this thematic, or is it more on the individual stock merit?
Initially, look, we're not. It's a bottom-up fund essentially, but it would be completely naive to ignore the top-down, the macro. We can't ignore currency. We can't ignore things like oil price, and sort of political risk. So the two have to marry, if you like. But we're not going to buy any stock on a thematic basis alone. That stock must make sense on a standalone basis.
Okay, now Ollie, you sit in the European team. Is there a collegiate approach to the way that you invest?
Yeah, look, Henderson provides a decent platform for me to run this trust. There's a number of smart people around me, and I take their views. We've got a large European equity team. And to be honest, all of those guys have some mid or small cap investments. So there's a lot of discussion, predominantly on an informal basis. There is team meetings, but I'd probably emphasise the informal more than the formal.
Now, we have a lot of companies that come through Henderson's doors. Do you like to have face-to-face meetings with the companies that you invest in?
Yeah, look, what do I do and what does Rory Stokes do, who I work with? We see companies. Probably do more than 600 meetings a year between the two of us. No, probably we do. I wouldn't overemphasize, actually them coming to us. We make quite a big effort to go to them and to do conference calls. So it's not all just about seeing companies on quarterly roadshows when they come to London. We've got to get out there and see them. And I put a lot of emphasis on the fact, if you can be a company's one meeting or one call of the day, you'll get a lot more out of it than on some sort of roadshow.
Now, investment trusts are able to gear, they can borrow. Is this something that's very active within the portfolio?
Yeah, we're geared today, we're geared about 12% today, but it will vary, that level of gearing, depending on our confidence or lack of, if you like, in the market. Also, it's worth mentioning we have about 4.5% of the trust is currently in unquoteds, so they don't move on a day-to-day basis. But yeah, gearing is there, and it's there to be actively used. And we have a maximum gearing of 15% is my agreement with the board.
Okay, finally, Ollie, all investments carry risk. So how would you define the risk with TR European Growth Trust?
Look, smaller companies are inherently more risky than their larger counterparts. And they're also more geared to global growth. So they are certainly a more risky investment in a period of recession or when expectations of growth declining. But ultimately, if there's global growth, this space can do pretty well, and it's worth investing in European smaller companies.
Ollie Beckett, thank you.
Thank you very much.